Moss Adams is pleased to present another in our ongoing series of continuing professional education webcasts. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize both how you view our presentation and how you interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. For example, you can click the file folder icon to download the group attendance sheet and a PDF copy of today's slides. You can ask our presenter questions during the webcast by clicking Q&A in the bottom left-hand portion of the icon bar and typing in your question. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. We'll ask polling questions throughout today's presentation. Per the National Association of State Boards of Accountancy Webcast CPE standards, CPE credit will be awarded based on your participation in these polls. To respond to a poll, click the button next to your answer. If you're attending this webcast in a group, in order to receive CPE credit, you must complete our attendance sheet, available in the file folder icon at the bottom of your screen. Please have all group members sign the sheet, and please remit only one sheet per group. Also note, today's session will offer you one CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. CPE credit can be awarded only to participants registered as themselves and is not available to participants who view the on-demand version. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon to open a PDF file you can save to your computer. We'll email a copy of your PDF certificate in 2 weeks if you can't download it today. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Good morning and welcome to today's webcast, Lessons Learned, Conducting Government Contractor Incurred Cost Audits. I'm happy to introduce today's speakers, Curtis Matthews and Jeff Witt. Curtis leads the Contract Compliance and Control Solutions Group and has practiced accounting in private industry, government, and public accounting. He has more than 30 years of experience in federal and state program controls and audits, including serving as a Defense Contract Audit Agency auditor. Curtis helps federal contractors and federal agencies address their substantial compliance challenges in meeting their audit requirements. And as a former federal auditor, he brings invaluable insights to the DCAA audit environment. Joining Curtis today is Jeff Witt. Jeff is also among the contract compliance team leadership. He brings over 25 years of relevant experience in leading government compliance consulting engagements, including assisting clients with developing policies and procedures and controls for compliance with federal acquisition regulations. Prior to joining Moss Adams, Jeff was a lead auditor for the Defense Contract Audit Agency for 10 years. Jeff's value to his clients is his comfort in working with the wide variety of audit types and addressing the unique requirements of each. Curtis, I will now turn the line over to you to get us started.
Thank you, Emily. And thank you all for joining us today. We hope to provide information that you're going to be able to use and take back to the workplace that's going to be completely relevant to the type of work that you do. To the extent you're doing work that is paid for out of federal monies. So today we're going to talk about the recent changes in audit coverage by the Defense Contract Audit Agency. We're going to talk about the audits that are commonly performed, covering government contractors, which may be more than what a lot of organizations are thinking about, and definitely are from what we've seen. We'll talk about the contract types and how that impacts audit requirements. We'll cover additional information, best practices, and this just comes from our observations in doing hundreds of audits over a period of years in this area. Hopefully we can share some of that experience with you and you can benefit from what we've seen. And then we'll talk about common issues as well that go along with that. Our agenda matches our objectives, so there really isn't much difference between what we're going to cover in terms of our objectives and our agenda. Today, we're looking at the impact of the 2016 National Defense Authorization Act, often affectionately referred to actually as Section 893 particularly. It's basically what this act has done has said that the Defense Contract Audit Agency is no longer going to support non-DoD agencies. That's the bottom line. So that has a pretty significant impact because both agencies and contractors have relied heavily in the past on the Defense Contract Audit Agency to do their audits. And there are significant ramifications for not having these required audits completed. There are ramifications to the agencies. The Inspector Generals are certainly showing no mercy in terms of how they're evaluating and reporting on agency performance. And if the agencies aren't conducting the audits that are required, especially these non-DoD agencies, that's going to land in the Inspector General report, and ultimately it's going to impact some people within the agency. From a contractor standpoint, it has a huge impact on the ability of a contractor to get paid, for the work that they perform. Essentially, the types of audits that were performed by the DCA that are no longer now being performed for these non-DoD agencies are incurred cost audits, but also proposal audits, system reviews, whether it be accounting, estimating, billing, purchasing, claims audits, financial capability audits, and other audits. And we've seen in our experience that agencies are expecting these audits to be performed. And they're looking for resources, the rate agencies, as well as the contractors that have subcontractors that are subject to these rules are looking for resources to accomplish this. There's a big impact that often gets missed, actually, on the part of contractors, that they have to be auditing their subcontractors for compliance. And when that isn't done timely, and when these areas aren't covered the way that they should be, a lot of times we've seen contractors find out, 1, 2, 3, 4 years later, and 4 years later was really bad, or more, that if the audits aren't conducted, then there ends up becoming significant exposure to disallowed costs due to failure to obtain a compliant audit. And as a result, we've seen contractors lose millions of dollars, basically, in amounts that they've billed that have now been disallowed and are being taken out of any remaining payments that would be due, and just significant problems in terms of the ability of the contractor to work effectively with their government customer. And of course, the government customers have the same issue because they're under scrutiny for making sure that these audits are being conducted. And so what we want you to do is just kind of step back, look at these 6 bullets here, and think about the audits that you're responsible for, whether you have a government grant, you have a government contract, whether you have rates that need to be compliant in order for you to comply with your contract, or a full audit that's required on your organization, or a system audit. Just think about the breadth of what we're talking about. And we're going to get more into detail about what these specific audits are. And I'm going to turn the time over to Jeff to talk. Actually, we're going to do a polling question, and then we'll turn the time over to Jeff to cover a little bit more about the different types of contracts and audits that I just talked about, and what the impact is and what the requirements are. But at this point in time, we have polling questions. It's really important to answer these. Emily will explain to you a little bit more about that. But these polling questions allow us to be able to provide continuing professional education certificates to the participants, to all of you. And so I'll turn the time over to Emily to cover this particular polling question with you and other matters related to our polling questions.
Great. Thank you, Curtis. And as a reminder, if you would like to receive the CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. And this is the first one that we have. The question is, Section 893 of the 2016 National Defense Authorization Act restricts DCAA from performing audits of low-risk contractors, of closed contracts, of non-DoD agency contracts, unless requested by the Administrative Contracting Officer, all of the above, or none of the above. And I'll give you a few more moments to make a selection. And we'll take a look at the results.
So that was a trick question for some, just so you know. So basically, the Defense Authorization Act is very specific to the issue. The main issue we're dealing with here is the DCA's coverage of non-DoD agencies. Move on to the next slide. Okay, so essentially, when we're talking about the kinds of contracts that are subject to audit, that affects the scope of the audits that are required and the amount of audit work that's needed. I mean, the contract type obviously follows the type of audit and audit work that's required to cover that. And so with a cost type contract, and here are some of the key clauses related to cost type contracts. There are very specific requirements for audit. We've listed some of them. And essentially the audit scope is very much encompassing, well encompassing. So it's going to include all of the direct costs, and it's going to include all of the indirect costs. And so essentially, you know, your labor, materials, other direct costs, your overhead rates, your G&A rates, you know, and then of course the profit fee amounts that are charged on these are all going to be included. Cost of money is included. So basically every element of cost is going to be covered in the cost type contract. So yeah, so including fee, all that calculation, the whole ball of wax is covered within a cost type contract. We'll talk more about some of the other types of contracts and the audit coverage that's required, but these types of contracts require the most audit work, as you can see by the type, or as you know, likely, because of all the costs that need to be covered. So we'll move on to another polling question, and we'll give you the opportunity to. We got to beat that 50% here, so let's go for it.
All right. Our second polling question is: which FAR clause requires agencies to establish final direct rates related to the cost type contracts they have issued? So see your four options on the screen here. Give everyone a few seconds to respond. And this is our second polling question of the day. So answer this and the next two, and you'll be all set for your CPE credit. And let's take a look at the results.
So basically, you know, it's the answer. Correct answer is FAR 42.703 that has to do with a single agency is responsible for establishing final indirect rates for a business unit or contractor. Essentially, there are other FAR clauses that are relevant to cost type contracts, but this one has to do with the fact that a single agency has to be identified and responsible for establishing final and direct rates, which is the question here. So let's move on to the next polling. Next item, then. We'll turn it over to Jeff. Thank you, Jeff.
Yeah, absolutely. So I'm going to go into a little more detail. Curtis mentioned those frequently performed audit types, and I'm going to have a few comments relative to each of these here. So incurred cost post-award. Post-award meaning after the contract was awarded. That would be when an incurred cost audit is done, after actual costs have been incurred, time has elapsed. After the end of each year of the contractor's fiscal year, within 6 months of the end of their fiscal year, they're required to submit an incurred cost submission to the government. That doesn't guarantee the government will look at it anytime soon. If they are a prime contractor that's has a government agency customer, if they're a subcontractor, then they're going to have to submit their submission to their prime contractor. And so either way, you wait to have that year completed. You have the incurred cost submission is going to include schedules on all your contracts and how much direct cost by cost element is being claimed on those, plus your indirect rates that are going to be applied to those direct costs on that contract. And then that claim then is what is audited, either by a prime contractor or by a government agency. So as Curtis mentioned, in the past, these non-DOD incurred cost submissions were usually audited by DCA. That isn't the case any longer. So now agencies and prime contractors that have non-DOD funded contracts have to figure out how they're going to audit those incurred cost submissions. So it's a big issue. Every agency out there is trying to tackle it, figure out how they want to handle it for their audits of their prime contracts, and also every prime contractor is trying to figure out how they're going to get those incurred cost audits done of their subcontracts. And of course, the type of audit, the steps to be done, is going to vary significantly based on the type of contract. We're going to talk a little bit more about that, as Curtis also has mentioned. The next type of audit that should be done frequently is proposal audits, either on a pre-award or post-award basis. So as we mentioned in our intro, both me and Curtis are prior DCA auditors, and in our time with DCA, we audited many proposals, both on a pre-award and a post-award basis. So the reason for auditing the proposal on a pre-award basis is it serves as a basis of negotiation for that contract then, that an audit has been done of the estimates and the amounts that are included in that proposal. It's a very important audit that should be considered anytime either a prime contract is being negotiated with the agency, or whether a subcontract is being awarded to a prime contractor. So we think that there's often times when that should be done, and we don't always see that happening, and so there's a concern there. Also on a post-award basis then with proposals, after that contract's been awarded, then what would be typically referred to as a defective pricing audit. When DCA was responsible for auditing, they would perform a number of defective pricing audits. They would do a risk assessment and identify which of those proposals they would perform a defective pricing audit. And it pertained to those that were fixed price, would be the higher risk, because on a cost type contract, the risk of defective pricing is substantially lower, because whether they estimated correctly or not, they're still going to be able to bill and ultimately claim costs based on actual costs. But on a fixed price proposal, all that risk is up front. And so to the extent that the contractor is providing false or misleading or inaccurate or incomplete cost or pricing data when doing that negotiation, then if that comes out in a post-award audit, then that's a basis for an adjustment to that contract. So those are important audits. System audits, of course, are pretty critical, especially for those contractors that are doing their first flexibly priced contract. And when we say flexibly priced, we mean it's either a cost type contract, or it's a time and material contract, or a labor hour contract, or any contract type where there's some element of actual hours or cost involved. So if that contractor in the past has always been awarded based on commercial pricing, hasn't ever had to bill based on actual cost, then pretty important to have that systems audit done, preferably on a pre-award basis, but if that can't happen, then on a post-award basis to verify the accounting system is capable of performing on a government contract with all of those requirements for what constitutes unallowable costs or unallocable costs, and to have estimating, procurement, billing systems, and other systems that are going to enable that contractor to perform well on that contract, and so there's not problems down the road when the billings start to happen and then they realize that there's really not support for the amounts that they're billing, or the way that they're calculating the rates is not compliant. So claims is the next area. There are frequently termination claims, delay claims, change claims, et cetera, that in the past would have been audited by DCA potentially, that they no longer can audit those either. So this is another area where it really, I think, is important to come up with a strategy. Yeah.
This is Curtis here. I'd like to add a couple things too. on the proposal audit side of the work, and particularly the post-award audit, there can be pretty serious ramifications for noncompliance in this area. Often there's a certificate of current, accurate, and complete cost and pricing data that's signed by the offerer, which basically means that you've provided all the information that would affect that contract price and all the information that you knew about, but also the information that you should have known about at the time of the handshake, an agreement upon price. So if you think about when a proposal is prepared, that's usually months, often months ahead of when the handshake occurs. It's as of that date of the handshake. So you're, as an agency, your responsibility obviously is to make sure that the contractor has provided you all that information, and as a contractor, your responsibility is to make sure that your subcontractor has, and your agency will hold you accountable for that. So it's critical to have a good, solid post-award audit performed to demonstrate that actions have been taken to address the disclosure of that information as of the date of agreement upon price. And those audits are all about disclosure. That's the majority of the coverage there. And then on the systems audits, Jeff and I worked on an engagement where we were brought in. It was a Department of Energy contract where the contractor had it's about it's a big business, half of it commercial, half of it non-commercial. The contracting officer basically told them that they had issued 2 audits. There were 2 audit reports issued to them by the DCA at that time before the Defense Contract, the Defense Contract Authorization Act, and I want to use the right term, National Defense Authorization Act. I apologize, the NDAA. So before Section 893. So basically what had happened there was their systems were found deficient. The government basically had to take the position that they could no longer do business with this company if they didn't correct the situation. They needed to have a compliant accounting, estimating, procurement, and billing system. That was an absolute requirement. So in that situation, instead of being the auditors, we're brought in as the consultants to help make sure, because we do a lot of these audits, we know what the auditors are expecting. We were able to, we had to work with the company to make sure that they complied. And if you can imagine the ramifications to an organization for failing to comply with this, they're pretty severe. And if an organization that fails to audit for this compliance is then held accountable themselves, ultimately, for not doing that audit to verify the system's compliance. And it's make or break. It can become make or break if it gets severe enough. And I can't emphasize enough the importance of ensuring that the systems of those organizations you're doing business with are compliant with the systems requirements that the government has laid out. So just kind of wanted to add that a little bit.
Thanks, Curtis. That was helpful. And a couple other points we want to make here with all these audits. First off is a lot of them require a significant skill set to be able to audit it correctly. And whoever is doing these audits, for example, if you have a delay claim, there's an ICLE calculation that is involved with the delay claim that is pretty complicated. And you need somebody that understands the ICLE method. If you're doing any of these types of termination, change order audits, there's a specific skill set required. So I think it's important for the agencies that are figuring out how they're going to procure these audits, and also for the prime contractors to be thinking about that need for a specific skill set that will enable them to get an audit result that really has value and isn't just a rubber stamping that would later prove to be a problem. So within that, also an important first step is figuring out what the end is going to look like. And the end for all of these is a report, typically. And so the question is, what kind of report is that agency looking for? Is the agency looking for a GAGAS report Generally Accepted Government Auditing Standards report. And typically when an audit is being done of the prime contractor, that is the expectation. And within GAGAS, there's a number of options. You could either have an audit done, you could have an attestation done, or you can have a performance audit done. So there's really some important things to figure out up front. The standard to be applied is critical to determining, to scoping that audit correctly and figuring out what the result is going to look like.
And we've been involved in literally numerous instances where before we arrived, I want to clarify that, the agency involved has said to the contractor that the work that was done under the audit was not compliant. It didn't satisfy the requirements. In one case, the Inspector General actually looked at the audit itself for the agency and cited both the agency and the contractor for being non-compliant in the audit work that was being completed. The audit was rejected, not used, so now they spent all this money and time and effort on an audit that was not used, okay, because it didn't fit the requirements. And then, of course, we were brought in to, do an audit that would satisfy the requirements, which I'm happy to say we've been able to do. But essentially, that's not the position you want to find yourself in, clearly. And we're going to dig a little bit more into this subject matter to give you hopefully information that will help you to address whether an audit is sufficient.
There it is. So the next slide is to talk about some important questions regarding whether an audit is sufficient. And I think an agency is going to want to be asking these types of questions when it's coming up with a strategy to address all these audits that need to occur, both for their prime contractor and what they should expect the prime to be doing with their subcontractors. So does the audit consider risk factors, including contract type, prior audit coverage, prior audit findings, adequacy of controls, for segregation of unallowable cost, and for correct allocation of cost? We believe that a robust risk assessment is critical to really conducting any of these audits in a compliant and efficient manner. So we take the time up front to really understand all these factors, and we'd recommend that approach as well. So also, does the audit apply sound statistical and non-statistical sampling methods? So for all of the time that we may find fault with DCAA, one thing that we can say is that they have done a lot of work in terms of coming up with sound statistical and non-statistical sampling methods. There's the contract audit manual that provides some really good options with regards to sampling. There's memorandums for regional directors that the DCA has issued on these subjects. They have a sampling program called EasyQuant that is pretty useful in terms of selecting and executing on samples in a way that you can then project that to the population with a high degree of statistical reliability. So we tend to, I guess probably because of our prior experience with DCA, fall back on some of that to decide what is the best statistical and non-statistical sampling method. So that's an important element of any audit. We have seen audits, literally, where there have been findings in the audit, where there might have been a sample done, there's a finding, and they include that finding in the report, but there is no attempt to determine the impact on the total population. To us, that's unacceptable, and I would assume anybody trying to use that report would find that unacceptable, because just saying you selected a small sample and you found some issues, but then not determining the impact on the population doesn't help anybody. So the next bullet there is, does the audit correctly identify the impact of issues? So we talked about that. Does the audit firm have the required quality control system? That's critical. Not every firm out there is going to be able to demonstrate that they have a quality control system that they would need to execute on these types of audits. Does the audit team possess the skills and experience to correctly apply the applicable audit standards? So we talked about GAGAS. Is the audit team independent in fact and appearance? Is critical. If that can't be established, then pretty much the audit isn't worth very much. Does the report fit the GAGAS audit report format? As we mentioned, there's a yellow book that applies to GAGAS, and Chapter 4 provides reporting information for audits, Chapter 5 on attestation engagements, and then Chapter 7 talks about reporting on performance audits. So it's going to be real important to pick the right type of GAGIS audit that you want to have, and to follow, very, very closely the requirements that are included in the Yellow Book.
So GAGIS is the standard that we're seeing the agencies across the board, want to have applied. That seems to be the most prevalent standard that agencies are looking for compliance with. And on the quality control system bullet there, I would encourage you to ask for the peer review report on the firm. There's an actual audit done by another firm on each CPA firm that has an acceptable quality control system will have another firm come in and evaluate their quality control system for compliance with requirements, and then issue a report on it that you can get a copy of. And we see out there's a lot of situations where there's no way that the firm could even demonstrate this compliance because they don't have that type of a peer review report out there. We were recently meeting with an agency, back in headquarters in D.C. there, and that was definitely something that they consider to be very important, and we complimented them on that. We thought that was a good approach to verifying that the firm did have a good quality control system, because GAGIS requires this. It's not because it's something they made up. I mean, in order for an audit to stand up to scrutiny, which it will get, and to be able to be irrefutable, it has to be compliant with professional standards. And the firm you hire and the work that's done has to comply with those standards in order for you to be successful, obviously. So
where the rubber kind of hits the road is this FAR clause related to closing out contract files. And what we've seen is that not everyone has really thought ahead to what this end result is going to be. Everybody knows that the ultimate objective is to be able to close out every contract, both every subcontract and every prime contract. If you don't close out the contracts, that means they remain open, and they present a real headache for the agencies and the prime contractors, especially as things age and become older. If you have to keep those open, you have to keep all those records, and there's a big cost to that. And then as people transition, move on to other jobs, you lose that institutional knowledge, and it really creates a lot of headaches and inefficiency. So we're really looking at this clause. This is where both the prime contractor and the agency would probably just like to close out all these contracts, but they can't because they have to follow the regulations. And the regulations say that that before they can close it out, a contract audit has to be completed. And so part of that requires evaluation of flexibly priced contract costs for compliance with FAR Part 31 and other applicable criteria. So flexibly priced contracts includes more than just cost-type contracts. It includes, as we said before, time and material, labor hour, other contracts where part of that contract price is based on actual hours or actual costs. So there's a lot of this going on out there where they're realizing, okay, we performed this contract, we're really all done with this contract, we want to close it out, but oh, wait a minute, we never had the audit done by the prime contractor, never audited that subcontractor, or the agency never audited those contracts for the prime contractor, and now they're trying to figure out how they're going to handle that situation. So this is an important area where you must think ahead, think to the long term, that eventually you want to be able to close out those contracts, and we concur with that plan. Another important area, which is a term that we get also from the Defense Contract Audit Agency, is the Mandatory Annual Audit Requirements, or MARs. And DCA was right that in order to really do an audit, particularly an incurred cost audit, there's some things that really need to happen before you can rely upon any of the audit work you did. If you don't have a reconciliation of your general ledger to your claim, but you've gone in and sampled transactions, well, you don't know that what you're sampling from even reconciles to the claim that you're supposed to be auditing. if you don't have a payroll labor distribution reconciliation, then you don't know that really those labor costs that you're looking at in the claim really reconcile to your payroll records. If you don't have an indirect cost comparison with prior years and budgets, then you wouldn't see any indications of risk that you should be seeing. If you haven't done an indirect account analysis, then you wouldn't be identifying those indirect accounts that could have unallowable costs. So all these things are very fundamental, but I would think if you really look at a lot of the audits being done out there, they don't necessarily can consider these MARs. So we think it's important that there are some basic fundamentals to auditing these types of contracts that really should be considered.
So in case you didn't pick up on it, in the bottom right-hand corner there, that is a Martian. So, all right. But yeah. It's actually MARS is the requirement, the mandatory annual audit requirements is the requirement that the federal government has been using through the DCA for many years, and failure to abide by these requirements has a likely impact or likely consequence of having the audit work be rejected.
So continuing with our discussion about incurred cost audits in particular, there's a number of factors that create complexity. Some of those have to do with the standards that apply. So we have a number of participants on this call that may work for other than a government contractor. They could work for a nonprofit organization, a university, a tribal organization. So there's different sets of standards that apply, and the standards that apply are on a contract-by-contract basis and have to do with certain time frames. So if the awards are made prior to December 26, 2014, and we use the word award, so that means each individual contract award needs to be considered separately. So you can have a situation where a contractor has some awards that were before December 26, 2014, and Circular A122 applies, and then the awards after that date are subject to the Uniform Guidance, Subpart E, which contains the cost principles there now. Because what happened is, you see, a lot of these circulars were in existence prior to December 26, all got replaced with the Uniform Guidance. And so there is that complexity of dealing with an incurred cost audit where you have to look contract by contract, figure out what the cost principles apply to that one, and apply it during the audit. So a qualified auditor must understand the correct cost principles to apply and must understand the situation so that you can have multiple contracts under different standards, and you have to design your audit plan accordingly. I think we're ready for another polling question.
All right. Our third polling question is, for 2016, which cost principles apply to for-profit government contractors performing on flexibly priced contracts? And your options are the Uniform Guidance, Subpart E, FAR Part 31, OMB Circular A21, OMB Circular A122. I'll give everyone a few moments to make a selection. Just a reminder, for those of you that would like a copy of today's slide deck, you can download them from the folder labeled Slide Deck and Handouts at the bottom of your screen. We'll also be sending slides via email after the webcast. And let's take a look at the results.
Well, thank you. So the majority of the participants were correct that FAR Part 31 would be the cost principles that would apply to for-profit government contractors. There can be a little wrinkle to that, so a little bit of a trick question, I guess, in the sense that if you're performing on grants can have different rules and contracts. So that's another thing that needs to be considered in this as well. So just another bit of complexity to make the audits fun. Okay, so continuing with commonly performed audits and going into a little bit detail on proposals, I think that the agencies involved and the prime have responsibility to provide this audit coverage. And in the past, DCA would have been performing those pre-award or post-award proposal audits. Now they are not available to do that for non-DoD contracts. And it's obviously better to do the proposal audit on a pre-award basis. If you can identify the inaccurate estimates up front, then you can award a contract that is the right value rather than having to detect it later on and renegotiate that contract. So with pre-award audits, the focus is on the accuracy of cost of pricing data and the reasonableness and support for the estimates made. So as Curtis mentioned, I'm going to get to the post-award in a second, but that will then assist negotiation of a fair and reasonable price on that pre-award audit. Now, on the post-award audits, as Curtis mentioned, they often have to sign a certificate of current cost of pricing data. This is an important document. Nobody should sign that certificate without full understanding of what they're doing, because they're not only obligating their company, they're also putting themselves at risk when they sign that certificate if they actually knew or had reason or should have known that the information they provided was defective or incomplete in any way. They're personally at risk. So that's important. There's thresholds for when you have to sign that certificate, but there should be good controls in place for any contractor. I certainly would want to have good controls in place before I would sign that certificate and put myself at personal risk. And it needs to be understood by the agencies and the prime contractors that is the case. There's a great deal of proof needed to validate that.
Yeah, at one point in the past when I wasn't an auditor, which was quite a while back, I negotiated contracts myself for Honeywell, basically, and I was at a relatively young age in my career, and I guess that's why they had me do this, because they'd have me sign these certificates. So, every time I would sign a certificate of, current, accurate, and complete cost or pricing data submitted at the time of agreement upon price, which is what we're talking about, that's kind of the key concepts behind it. When I'd sign that certificate, I would basically rerun my proposal, gather all the information that I needed, because essentially it is a big risk, and it is something that we just want to highlight to you as you're working in this environment, that there are personal risks and company risks associated with submitting a proposal to the government, especially on a fixed price basis, particularly.
So now to go a little bit more in depth on systems audits. So an accounting system is one of the most frequently performed types of system audit, and as we mentioned, it can be done on a pre-award basis or post-award. Sometimes there's just not time to get it done on a pre-award basis, but if you can, then that's preferred, because you really, if you do it on a post-award basis and you find out that contractor doesn't have the systems in place, then you're in a difficult spot. So the things that should be looked at as part of that accounting system audit is are they able to accumulate cost by contract? Are they able to include only allowable direct cost? And are they able to allocate indirect costs compliantly and to exclude unallowable costs? Where we see issues is typically related to the indirect rates. So there's a typical structure for a government contractor is maybe a fringe rate, maybe one or more overhead rates, and a G&A rate. And in the G&A rate, what you have is a lot of these corporate costs, where you have maybe a vice president traveling to do some marketing or whatever the case may be, and that vice president is pretty far removed from this contractor, understanding that there's requirements that they not have unallowable cost in the travel costs that they're charging into that G&A pool. So it's very common, almost the rule rather than the exception, as you dig into that G&A pool, that there's going to be unallawables in there that weren't segregated. So it takes a pretty good system to really understand that and to exclude all those unallowable costs. It's a little bit easier on the direct cost side because you're so much closer to the contract. You have to bill those direct costs on a monthly basis, and they're probably going to detect any unallowables that are part of those direct costs. But on the indirect side in that G&A pool, it's a very common occurrence. So, does that system really understand that, and has it been designed so that there's controls to segregate all those unallowable costs? Procurement system audits are becoming more frequent for one reason, due to the uniform guidance requirements. If you look in the uniform guidance, there's a whole section on procurement system requirements for government contractors. So there's things such as how they document that competition happened in the way that it needed to happen before an award was made out of that procurement system, that there's documentation for sole source, why the sole source selection was made. So there's a lot of other requirements for procurement system audit. So that's important as well for contractors to understand, and for agencies as they are executing on their responsibilities to conduct audits of the prime contractors. So contract type impacts. So as we say here, most government agencies and contractors understand that cost type contracts require incurred cost audit. I don't think that's a big surprise that they can't really close out a cost type contract unless they've had an audit done. They know that there's the clause in the contract that requires that almost universally in those kind of contracts. So, but what wasn't as well understood is the audit requirement for other flexibly priced contracts, and we've been mentioning that. We've seen that situation happening over and over again where maybe a prime contractor just wasn't doing audits of their subcontracts that were time and material or labor hour or other types. And then they get to the point where they want to close those contracts out, and then they talk to the agency, and the agency is saying, don't you dare close those contracts out. You haven't met the requirement, and we can't close out our prime contract with you until you meet the requirement to audit your subs correctly. So it creates a big problem, as we mentioned. Each agency has or is now coming to that realization that there are thousands of these flexibly priced contracts and subcontracts out there that have not had the audit that is needed before they can close them out. So then I wanted to talk a little bit about these particular contract types and the type of risks, and then the audits that would frequently be performed. And in the past, I think the focus was on the first item here, the cost type contract. So we know that there's the risk of unallowable cost, could be especially in the indirect rates. We know that there's unallocable or unreasonable costs, so the allocation of the cost is a major factor. And then the audits that are frequently performed would be the incurred cost audit, but also accounting system audit, billing system audits, and others. So time and material contracts and labor hour kind of have the same risks here. Incorrect rates. So if at the time of negotiation of those T&M rates, they didn't provide accurate current cost pricing data, then that becomes a risk that those rates were incorrect and should have been adjusted to reflect the actual cost as adjusted for known changes expected in the future. So also incorrect hours or incorrect category are risks related to these types of contracts. So the types of audits frequently performed, incurred cost is needed. So it might be a surprise, but on a time and material contract, an incurred cost audit is needed. An accounting system may be needed as well. So how are those hours being recorded? And also the accounting system pertains to how they were able to negotiate those rates to begin with. So if they didn't have a good accounting system that provided accurate information on what those T&M rates should have been, then that's a risk. Of course, there's the defective pricing risk based on those rates. And so for firm fixed price then, looking down there, what are the risks there? We have the defective cost or pricing data is the biggest risk related to a firm fixed price contract. So the systems that are impacted by that are the estimating systems. So if you have these firm fixed price proposals, you need to make sure that that system that they're coming out of is adequate.
Okay, we're going to just briefly talk about audit efficiency. Essentially, we see a lot of organizations that want audits done for them, and we see a lot of situations involved in auditing that we come into, and what we want to do is arm you with information as you're procuring auditors so that you can ensure that the audits that are going to be performed, or if you're going to do them internally, that you have an efficient way of doing that. And the number one thing that's going to be really important to do, and there's kind of more than one number one thing here, but I would say the first thing on the list is pick the right standard. Pick a standard that's going to hold up and be clear about what the criteria is if you're going to use GAGAS, which is preferred by the government agencies, and ensure that the standard you're using makes sense for the work that's going to be done. There's red books like the Internal Audit Standard, AICPA, consulting. These are pretty wide open standards. Determine whether it's going to be a performance audit depending on the situation, but most of the time it's going to be an audit or in a test type engagement that you're going to want to have done. The second item I would say is, like we talked about with Mars, is do a thorough and well-documented risk assessment. And then the next item is, as Jeff talked about extensively, is pick a good, solid sampling method that provides reliable results and that is efficient in terms of, the amount of sampling that's going to be done, and it's well laid out. And I can't overemphasize the importance of having a clear and concise document request. And this means that the auditor that you're working with should really understand the subject matter in such a way that they're able to come together with a very organized approach and a very clear and concise list of documents they need to see. So from the very beginning of the audit, you're requesting the documents you need, and you're getting them, and you're working through this in an efficient way. And then the approach is such that the contractor being audited knows exactly what they need to do, and they're accountable for the time frames in which they provide the required information. And the last thing, of course, is the understanding of the parties involved, so that the work that's being performed doesn't result in a lot of unsupported costs or issues. The less issues, the more efficient the audit. And essentially, there can be significant disallowed costs when audits aren't done soon enough, the parties aren't really of a good understanding of what they need to do to comply, and then as a result, then there becomes a lot of findings in terms of unsupported costs, which means that the contractor is unable to demonstrate the cost was relevant to the contract and compliant with the contract, or allowable and allocable.
So I'm going to talk about some recently observed issues that we wanted to share with you. And I realize the time is running short, so I'm going to be quick here. So close out. So we talked about the first bullet. That you got to have the audits done to close out contracts. The second bullet is the situation where DCA they've been right in the middle of doing audits. As soon as the National Defense Authorization Act passed, they were told to stop work, put pencils down, and now the contractors are dealing with a situation where they may have even thought they were through the audit, but it wasn't to the point of having a report, and so now DCA won't do anything on those audits anymore, and they think that's because legally they can't do anything for the NDAA. So how do you get those indirect rate audits done? The next issue is a cost plus percentage of cost issue that I want to dig into a little bit on the next slide, and we'll talk about that in a second. Also, T&M contractors not utilizing T&M rates. So this is something that a DCA auditor doesn't typically focus on, but we've learned that it's an important thing to consider. So if you have a T&M contract and you have that T&M clause in that contract, then you're obligated as the prime, and you may then have a sub who's also doing work that relates to that scope of work. And if you should be using the T&M rates that were negotiated for that contract, you have to use that for that sub's time as well. Because what we'll often see is that those subcontract costs come through based on actual costs. Whatever that prime paid the sub, they just pass that on to the government. Well, that may not be correct, and that's an important thing to consider is, are you complying with that T&M clause in your contract? Should you be using that for the sub's work as well? And incorrect T&M rates and personnel assigned to incorrect rate categories is always going to be a risk on a T&M contract. I want to dig in then a little bit to this cost plus percentage of cost issue. So we're saying recently observed issues, but obviously this GAO decision is not too recent, many years ago here, but it's really important because we see it all the time, and not just at one contractor. We're seeing it in many different places, that this is apparently not understood by everybody in the contracting community, that this type of contract is not legal. So when it meets these particular criteria, it's not legal. So if the payment is at a predetermined rate, and is it applied to actual performance cost, and whether the contractor's entitlement is uncertain at the time of contracting, so that means they don't know how much direct costs they're going to incur. That part of the contract is based on actual cost, but then they apply, say, a fixed G&A rate that they negotiated as part of that contract. That's not an allowable type of contract. You cannot apply a fixed rate to actual costs on a government contract. And so we see it happening all the time. It's a big headache for the prime contractor when they come to that realization that they negotiated an illegal contract with their subcontractor, and it becomes a big headache for the government when trying how to deal with that. How are they going to pay this contractor, and how is that prime going to pay its subcontractor for the portion of the contract that is illegal? So it's important to understand that I think there's some options available to dealing with that, but it's going to have to be kind of determined by each agency how they want to tackle that situation. But it's definitely happening a lot, so I would recommend any of you in that situation of having those kind of contracts should look at them and see if it in fact has the CPPC issue as part of that contract. Time for our last polling question.
All right. Our final question is, a T&M contract or subcontract that includes a G&A rate that is applied to total direct materials costs in accordance with the contractor's disclosed allocation practices, does not violate the CPPC rule if the rate is subject to later audit and true-up, violates the CPPC rule if the rate is fixed and not subject to true-up, does not violate the CPPC rule as long as the fixed rate is agreed to at the time of contract negotiations, all of the above, or A and B above. And once you've completed your CPE requirements for today, you'll be able to download a PDF copy of your certificate from the certification icon at the bottom of your screen. And let's see the results. Jeff, back to you.
Hey, we compliment you. That was definitely a trick question. Jeff came up with that one. So it's A and B.
Right.
Good job. Okay, next item, key takeaways. DCA is what we talked about today pretty extensively, is the DCA is no longer auditing non-DOD agencies. Agencies are developing guidance relative to the NDAA, and that you can use outside resources to help you. The bottom line is you got to demonstrate that you've got independence performed, you've got capabilities needed that are going to be applied, and agencies are looking for audits of the same or better level than performed previously by the DCA. So those that are doing the work really need to be familiar with the requirements that agencies are used to having in terms of the audits that are being performed. So let's just move on. There are many types of audits that are required. We talked about them. We talked about the fact that time and material and labor hour contracts do require audit. We talked about audits of proposals, pre-award, post-award. That's another area that often gets missed and needs to be covered, or it can come back and bite you. And again, outsourcing is something you may have to consider to address the requirements here, and should consider. Let's just move to the end here. This is our phone numbers right there on the screen in the slides. Don't hesitate to call us if you had questions, if you need help. We don't have little clocks in our office running. We're not going to charge you for it. We can only cover so much in an hour webinar, and we want to be as supportive as we can be to those who've chosen to participate in our webinar. We value that, and we appreciate you being here. I'd like to turn the time over to Emily to kind of close out.
Great. Thank you, Curtis and Jeff, for a great presentation today. If you had a question during today's presentation, sorry that we did not have time for questions, but we'll be happy to follow up with you after the webcast. And as a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet in order to receive credit. You can download this from the slide deck and handouts icon at the bottom of your screen. If you participated as an individual and met all CPE certification requirements, your certificate is available to download now at the CPE icon at the bottom of your screen. Open the icon and click the printer in the lower right corner to download a copy now. I'll be keeping the webcast console open for a few minutes to give you time to do this. A copy will be emailed within 2 weeks should you have any difficulty at the moment. And here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.